Today I'm going to talk about Wendy's second quarter earnings and how it affects my outlook on the company. Wendy's went and released its most recent quarter earnings last Friday, August 8th. I went and read over the earnings release and listened to the call. Looking at the market's reaction so far, it's actually been fairly positive. Not a huge gain, but the stock isn't crashing either. Year to date or the last year, definitely not looking good. But in the last month, we've seen a little bit of a recovery, and post earnings, it didn't totally give up all the gains. It's pretty minimal gains it's made in the last month, but it's not just completely retreating and going down. It's not continuing to deteriorate, which definitely is a good sign. So hopping into the earnings release, there are a couple of interesting things to look at. So revenue continued to decline year over year due to a decline in same restaurant sales growth. That same restaurant sales, it's still declining in the U.S. International growth is solid and growing at a strong rate, but the U.S. is just a bit of a struggle continually, which is something that definitely is concerning. Wendy's management is actively trying to figure out on how to revitalize just that U.S. Restaurant growth. Now, on a quarter-over-quarter basis, Q2 was actually better than Q1 of 2025, just following that historical seasonal trend, but year over year, it is on a downward trend. Now, earnings per share was actually stronger and grew year over year. Despite that decline in revenue, the earnings per share growth was actually due to lower advertising and operating expenses, as well as some of the share repurchases that Wendy's has done over the last year, just reducing that share count when calculating earnings per share. Now, on to, really in my mind, one of the lousiest parts of the earnings release, and that is the guidance. So management went and cut its guidance for the year and is now expecting earnings per share of anywhere from 82 to 89 cents per share for the year, as well as cuts to its adjusted EBITDA and free cash flow. This cut was primarily due to management expecting the same restaurant's sales to decline more than expected for the full year, as well as the system-wide sales. On the call, management said that sales for July didn't look great and had a roughly 5 to 6% decline. So some of that issues we've been seeing in Q1 and Q2 continued into July. They're kind of hoping we're going to still see some recovery in the second half of the year, but as of now, they're just predicting that there really could be a decline that continues, which definitely wouldn't be great. So which is why we're seeing that earnings per share guidance. They did cut that forecast. Now, this expected decline is due to economic factors and industry struggles. And Wendy's kind of moving around its promotional schedule a little for the remainder of the year and try and be a bit more focused. Wendy's is currently doing a collaboration with the Wednesday TV show. And in the fourth quarter, it's going to be launching new chicken tenders and sauces. It'll be interesting to see if these promotions will be able to generate that buzz and sales that Wendy needs to try and get out of the rut, as it is really just in as far as the U.S. goes. And then obviously just keep up international growth as well. Now, on the positive, Wendy's went and opened up 44 new restaurants during the quarter. So total net restaurant growth is year to date is 94 net new restaurants, with the majority of them being international, which that sector is seeing a lot better growth. Management also did confirm its next dividend will be paid in September. Even based on the earnings guidance reductions, Wendy should have anywhere from a 63 to 68% payout ratio, which is still safe and allows some room for them to continue to just reinvest and grow, as well as if somehow forecasts continued to decline or they performed worse than forecasts, they still have a little wiggle room. It's not like they just wouldn't be able to cover the dividend. Overall, I'm not super excited about this earnings call. And while I did say I'm pretty close to the most I want my exposure to be in Wendy's stock, this definitely isn't pushing me to go buy a couple more shares and just kind of be as far as I would want to go. But I'm going to hold off as far as buying anything new now. The stock did recover a little. I'm glad it's not just continuing to crater. Where they are still paying out the dividend, I'm not super worried. I am just going to hold it. But it's not anything I would be super stoked about entering a new position in, especially without some of that really just recovery that they're expecting to see. Now, if they could start to turn around the corner we could see the same restaurant sales start to recover, overall revenue recover, then I would feel a lot more confident about it. I wouldn't mind buying a few more shares, but as of now, I'm just going to hold my current position. That's it for this video. Thanks for watching. Let me know if you have any thoughts.